Well, if anyone's going to give Qantas a run for its money in provoking union and government anger, it's the banks. The biggest and most profitable is the Commonwealth, and this week, new CEO Ian Narev announced another record interim result of $3.6 billion, and earlier joined in its three big competitors in bumping up home loan rates. I spoke to the Commonwealth's new chief this week. Ian Narev, interesting that you said that new loans were unprofitable before the latest rate increase of 10 basis points, but there's not much of an increase. I mean, they can't be very profitable now. Are they even breaking even now, new loans?
Well, Alan, when we're looking at the price of home loans, we're obviously balancing a lot of factors, and one of those factors is the cost of funds, and another factor is the actions of our competitors in a very competitive market. And although there are those who would like to believe that if we want to jack up the profits on loans, we can just put up the price as much as we want to, in actual fact, there is a competitive market and we have to watch what our competitors do. So when we balanced all those aspects, we felt that the 10 basis points was the right amount.
So, but are new loans still at a loss, or are they profitable?
At the moment, on the current cost of funds, new loans have just crossed the profitability line again, but as you identify, 10 basis points doesn't exactly make a huge difference.
But if your new loans are just breaking even, it means that more business you do, more new business you do, the more that erodes your overall profitability.
Well, that's right, and that's one of the reasons we have to take the steps that we take. Now, obviously, cost of funds move over time. What we don't want to be is react in a knee-jerk way every time things change, because our customers want some sense of stability, but these are the sorts of things that we need to balance when thinking about a business that's going to be sustainable for the long term.
You're under incredible pressure from the politicians to restrain your pricing. I mean, I can't think of any industry ever that gets the Treasurer and the Prime Minister attacking the the companies in the industry for their prices in the way that they do in Parliament day after day. So the first thing that arises from that is, do you think that what the Treasurer and the Prime Minister is saying is hypocrisy, because they're actually going around the world spruiking how strong our banks are, while at the same time attacking you for your pricing?
Well, there are two things that are very important to me, Alan. Number one is that the whole relationship between a bank and its customer base, or the bank and the community, should not be defined by one pricing point on one product. I mean, we've got 1.8 million home loan customers, we've got 10 million deposit customers, we've got 800,000 shareholders. I mean, all these people should have a voice in what the bank does, but it seems that there are people who want to make the whole discussion about home loan customers, who are important to us, but they're not the whole debate. The second thing that's very important to us is that the debate must be had on the facts. And we've heard talk about our funding costs aren't going up, or deposits aren't expensive, or we're far more profitable than other banks in the world, and when you put the facts on the table, these arguments simply can't be sustained. That said, I mean, we're the second biggest company in Australia, the biggest financial institution. I'd be naive if I didn't think that from time to time there are people who are going to want to lob grenades at us for various reasons. That is part and parcel of big company life.
But does it make any difference to you? I mean, would you have, leaving aside the competition with the other banks, would you have done anything differently in your loan rate pricing than put up by 10 basis points if there hadn't been such political pressure on you?
The primary thing we look at is obviously the actions of our competitors. But there's no doubt that the whole industry does get influenced by a public debate which focuses a lot on these prices. That's something we all need to take into account when we are running our businesses.
You don't want to say that, because you'll just encourage them. They'll keep telling you to do
well,
it.
as I say, some degree of the
Obviously, you're saying that they do have an impact.
I say some of the scrutiny we expect, but I just want the discussion to be had on the facts.
And you're saying, you're not going to announce any redundancies like ANZ did, and that's fine. But you've got 52,000 people on your books now. How many will you have in 5 years? Because you've got natural attrition of 3,500 a year.
Yeah, we're always looking for ways to make the business more productive, and that means in some cases as people leave, we won't need to replace them because we've become more efficient. In other places, for example, in our customer service areas, we might want to add people. So this isn't a matter of target headcounts, this is a matter of finding the most efficient way to do business.
No, but just as a guess, do you think you will have fewer people working in the bank in 3 or 5 years' time?
If revenues continue to grow, I imagine we're going to be able to grow them without adding many people, and I expect revenues to continue to grow because we've got a lot of productivity in our cost base.
Right, so what you're saying is so you're looking at it in terms of unit costs, or employees per dollar of revenue.
The way I would prefer to put it is that the current expense base, including our employees, should be able to support a lot more revenue than they're currently supporting. And as the business keeps growing, there shouldn't be a need to add expense at that rate.
Thanks for joining us, Ian Narev.
Thank you very much, Alan.